So let's talk about the key point which keeps troubling all of us at this moment. And every day we have the newspaper headlines screaming in our faces that market is at a new high. And this is contrary to what is actually happening in the global financial market. Yes, I do agree that the markets are behaving differently from what's actually happening in the global market. And in my opinion, they're behaving very rationally. There are many plausible reasons and explanations for the same. There are many things on the economic front that we are doing right as a country. Our inflation is very much under control. Our economic policy on the ground has laid a strong foundation for future growth. The demography of the country are more favorably placed than any other country in the world. I can list many more positives, but I guess you get the trend. Before I talk about investing at the peak, let me remove a wrong notion about the market that we've risen too fast too quickly. If I look at it statistically, the last 5,000 points that we moved, that is from 60 to 65,000, is probably the slowest that we've ever seen in the history of the market that we've seen. One of the slowest that we've seen. So what I've captured out here is the Sensex data right from 1979 when it was there. What I've got here is at each and every peak, what is the return that you would have made if you had invested at one peak to the next peak, and the time period that we've got out there. So starting from 1979, 4th April, we hit the first peak in 1982, return of 29.5% from one peak to the other peak. When we were at the first peak, we didn't know where was the market headed. We had probably the same questions. We can go on and on and on. And during this time period, we had a lot of events. We had multiple elections. We had monsoon failure. We had a couple of scams out there, financial scams. We had the PIX crisis. We had the Euro crisis. And we keep debating about everything. So in a growing economy, it is natural for earnings to grow higher and higher. This has resulted in the equity markets hitting a new high over the last 42 years. And there have been 10 instances where this has happened. That's an average of one new high every 4 years. What we have in this slide is the CAGR return if you had invested at the peak of the market and stayed invested till the next peak, and the number of months taken for the Sensex to move from one peak to the other peak. What we had done out there is graphically captured the numbers to make an impression. This is how the actual Sensex number is depicted. This is the actual index. Due to the scaling, we decided to show the previous slide, but if I've pinpointed exactly at the various places, how from one peak to the other peak, you had the kind of return you would have made. Let us look, if we had invested at the peak of the previous peak and stayed invested till the new peak, how much return would you have made? This is exactly the current dilemma that you as an investor would be facing. Let's look at all the 10 instances. Of the 10 peak to peak investment, there are 7 instances where you would have made a CAGR return of more than the long-term average return that the market has generated. Let's look at the other 3 instances which are highlighted in red, which did not make it to the above average grade. So case 1 was post Harshad Mehta scam. The market gave a return of about 4%, and it took almost 94 months for the market to come back to the previous peak. Mind you, if you look at the previous peak, we got a return of about 98% in a very short period of time. And I would tend to believe this also coincided with the Y2K peak. Yeah. And there was a lot of consolidation which was actually happening in the markets. The second instance was the period post the global financial crisis and the PIX crisis, that the market gave a return of just 5%. Finally, between 2015 and 2020 peak, we had number of local issues. We had the GST introduction, which disrupted the economy. We had DeMon, which again disrupted the economy. We had the ILFS crisis, which was, according to me, a huge crisis, but very well managed. And of course, we had the taper tantrums, which kept the CAGR close to about 7%. It is interesting to note that the current peak that we have seen in the market right now, it has given a return of 13.6% and has taken 42 months to come across to the new peak. Both return and time periods are more or less in line with the long-term averages. So there are two fun facts that I would like to point out here. Despite the lower than expected returns in the 3 time periods, it's very interesting to note that each of these periods are reporting a higher CAGR return than the previous peak. We had 4%, 5%, and 7%. Fun fact number 2, the minimum time taken for one peak to the other peak is 20 months. That's the Harshad Mehta scam. And the maximum time it has taken is, I think, close to 8 years, which is the 94 months, which we've seen. This average time taken to establish a new peak really ties in with my next slide, where the economists believe that Indian economy is expected to double in the next 7 years.